Hello, my name is Darren, and we are members of something called the International Business Structuring Association, or IBSA. Essentially, it's a network of professionals that serve clients, private clients, or families that are exposed to multiple jurisdictions and they're running businesses, entrepreneurs. So it's not just restricted to tax, even though we're going to talk about tax. It'll be like investment migration, IP lawyers, insolvency, just anything to do with what the family will go through as they cross borders. And with that, I'd like to introduce you to the panel. Jose, you know, start from your side and introduce yourself.
Thanks everyone to join this, and thanks Darren and Step 80 also for our participation. I'm a tax partner in Squire Patton Bugs, based in the Madrid office. I do international tax, even though I could sound probably American. It's my mom's American, my dad's Spanish, and I'm actually probably the only one not talking about U.S. taxes here, but some of the additions around that, which is always great to hear. Everyone living outside of the UAE, like myself, is excited to come to a place where Texas is a friendly environment for Texas. So you got to stay away of our tax network around how the trends, the difficulties around kind of keeping taxes low, and especially with U.S. citizens. So happy to be here and try to contribute to this discussion.
Hi, my name is Jimmy Sexton. I'm the founder and CEO of Esquire Group. We provide international tax and wealth planning services to affluent multinational families and help them minimize their taxes and pass their wealth to the next generation in a tax efficient and organized manner.
My name is Vince Trong. I'm based here in Gate West with a company called GSB Capital. I'm from California. I'm an American CFP, so I do financial planning, financial modeling, asset management for clients, and I've been here 16 years now.
I know it's really hard to guess, nobody has a crystal ball, but what do you expect the tax landscape to reasonably look like by the end of the year, when this is all done and dusted?
I think on the international side of things, I think there's some good stuff in there. Like I said, they want to, right now, if for guilty purposes, you take a 20% haircut on the foreign tax credit, you only get 80% of 100%. They want to do away with that. They want to extend the foreign derived intangibles income for U.S. C corporation. It's supposed to go up from 13% to 16%. They want to extend that. I think there's a lot of things that they want to extend and improve upon, but I think that these are really things that affect a small minority of the people. So I don't think there's going to be a lot of people paying attention to them, right? I think I read the day before I came on the state and local taxes. They got that up from 30,000 to 40,000. Apparently there's a deal. But I think we're likely on this to see a lot of the sort of more popular things go through that affect the large portion of people. So things like the child tax credit, the no taxes on tips, things of that nature. If they get the estate tax to be exclusion to permanently be 15 million, I'll be pretty surprised. I think there's going to be quite a bit of pushback on that. I think that will probably be the landscape.
I didn't know about that, but I was also discussing, and one of the points that is different from the U.S. side that we see from the international network, you said, that usually inheritance tax, like what happens in Europe and things, is taxed on the heirs. In that case, you see, and another interesting fact is the gift tax, right?
Yep.
The gift tax is actually the donor who's taxed. There's a big lifetime exemption around that. But in Europe and other countries, it's the donee who's actually the recipient who does that, right? And I know there was talks about that they were going to reduce the lifetime exemption, but then they pushed it back. And so all this confusion around that sometimes is keep an eye on.
Yeah, I mean, I think the big thing that we're seeing now, right, is originally the estate tax exclusion was down at like 5 million, and then it was a date, and the way it's an estate and gift tax exclusion, right? So it's one amount. It's basically, let's say you have a lifetime estate and gift tax exclusion of 7 million. It means you can gift up to 7 million during your lifetime. Whatever you don't use during your lifetime is basically left over to be your estate tax exclusion. Trump was able to increase it, and now it's increased. Now it's, I think, 13.99 million this year, but it's supposed to expire and go back to 5 million next year, indexed to inflation. That would come out to about 7. But I think that's going to be, like I was saying, I think that's going to be the biggest thing that's going to be seen as a tax cut for the rich. The same with the state and local income tax deductions. So I think there's probably going to be some pushback on those things that clearly at least appear to the nation to look as only benefiting the wealthy. And we'll probably see some progress on the tax-free tips and stuff like that. But I think the stuff that they're proposing on the international side, I think is going to probably fly pretty far under the radar because most people don't pay attention to it, and it really only impacts a small number of taxpayers. So I think most of the stuff that's been proposed on the international side will go through.
Yeah, and just to add to that, I think we just need to bear in mind that this is President Trump's second term. But so he had a the Tax Cut and Jobs Act in 2017, which was the biggest piece of tax reform since 1986 under President Reagan. And it's part of his legacy, right? So it expires this year, so he wants to see it continue. So one would imagine that a priority, at least from a White House point of view, is getting that renewed or perhaps, exceeded in some way, shape, or form.